This is the debanking executive order that basically says you should not be doing banking based on political beliefs, religious beliefs, or lawful business practice. In other words, shouldn't be turning people away based on those three things. Now, the religious beliefs is already covered from a lending standpoint under the Equal Credit Opportunity Act, but political beliefs, there's no law that says you can't take that into consideration. Now, you may be criticized if you are in your next exam, but it's not a legal thing. It's an executive order thing, doesn't carry the same weight. And then lawful business activities doesn't mean you have to bank everyone. You still have a right to bank who you want. There are a lot of banks out there and credit unions out there that choose not to bank certain industries, certain types of businesses, because there's risk associated with it. And I know you're hearing a lot about reputation risk right now. Here's the thing, okay? This is policy and this is framework from a regulatory agency perspective. These things didn't change laws. So you still have a right not to bank who you want to bank. You don't have to bank someone you don't want to do business with, an industry you don't want to do business with. Could you get criticized? Yes, but it won't be legal. Hey, you won't have to go to court over it. Okay, provided it's not tied to some other legal protection that's out there. But again, executive order doesn't carry the same weight of law, but it will come up in discussion. You're going to have to be prepared to have the discussion if it comes up that you've chosen not to bank somebody that is part of a lawful business, but just something that you reputationally don't want to get into. Reputation risk should still matter to you. It may not matter to your examiners, may not matter in Washington, but it should still matter to you and the people that run and own your financial institution. Number 43, the CFPB, their rulemaking agenda